I just want you to be aware of what we call primary and secondary markets, particularly when it comes to the issue of shares. And I want you to be aware of how this impacts on the balance sheet. I'm going to start off with primary markets. So if a company issues shares, let's say it issues 10 million shares at $1 MAC each, it's going to raise 10 million MAC dollars. And its balance sheet is going to change because it's going to have 10 million MAC dollars in its bank account. And then in addition to that, in its equity section, the share capital is going to increase by 10 million MAC dollars. So when a company issues shares, what we call a primary raising of capital, it has a direct impact on its balance sheet because its cash goes up and obviously the share capital under the equity section goes up as well. Once that company has issued those shares, however, if people take those shares and they start trading them on a stock exchange, either the Johannesburg Stock Exchange, the Nairobi Stock Exchange, the Zimbabwe Stock Exchange, the Lagos Stock Exchange, that is what we call a secondary market. And it has no impact on the company's balance sheet. Let me explain. Let's say I bought 100,000 MAC dollars worth of shares in this company when it issued them. So it issued the shares in terms of the primary capital raising. I got the shares and I paid 100,000 into this company's bank account. 2 weeks later, I take those shares and I sell them on a stock exchange for, let's say, 300,000. That means someone else has bought those shares from me. They give me 300,000 MAC dollars and they get the shares. It has no impact whatsoever on the company itself. The balance sheet of the company does not change in any way. That 300,000 comes to me in my personal capacity as a shareholder. Similarly, if I'd sold those shares at a loss, let's say I sold them for 80,000 MAC dollars when I'd actually subscribed to them for 100,000. That trade on the secondary market has no impact whatsoever on the company's balance sheet. So I want you to keep that in mind, that when it comes to shares, you need to keep in mind whether the company is issuing shares, a primary raising of capital, or whether it simply trades on a stock exchange, on the secondary market, which has no impact on the company's balance sheet per se.